After putting in a high of mid-November in 2021, Bitcoin subsequently lost 52% of its value, bottoming in late January near 33,000. Some traders argue that Bitcoin's plunge coincided with the realization that the Fed was going to be aggressively raising rates, which could be viewed as healthy for the US dollar and lessen the need for Bitcoin as a dollar hedge. But if Bitcoin's primary function was truly a dollar hedge, then why would Bitcoin have rallied alongside the dollar index from June up into those November highs? Now, others argue that the explanation is more simple, and that higher rates themselves make the cost of owning Bitcoin more expensive, similarly to gold and other non-interest-bearing assets. Now, I fully understand that many Bitcoin holders are being paid interest on their crypto holdings, but those rates are usually uncorrelated to US Treasury yields. Now, one thing that has emerged, and it's difficult to ignore, is Bitcoin's directional correlation to the NASDAQ. The NASDAQ also put in highs in November of 2021 and had a major sell-off bottoming in June, just like Bitcoin. Now, whether it be rate sensitivity or that they're both viewed as risk assets, it's hard to ignore the relationship. Now, Bitcoin has had a multi-week rally up around 35% since those January lows amidst some escalating geopolitical tensions. Now, if a trader believes that the current rally has legs, perhaps because the market is priced in too aggressive of Fed rate hikes or concerned that those tensions may increase, an example of representing that thesis using CME Micro Bitcoin futures contracts would be to buy the February Micro Bitcoin futures contract at current level around 43,500 and target the December congestion area around 50,000. A stop could be placed just below the February 14th low at 41,500. This trade could make $650 if your target is reached, or risk $200 if you're stopped out at your level. Now, a reminder, the Micro Bitcoin contract is 1/10 of a Bitcoin, so every dollar change is 10 cents. Now, if a trader believes that more hawkish policies could drive Bitcoin lower, an example to represent that thesis would be to sell the February Micro Bitcoin futures contract as 43,500 and target the January lows at 33,000. A stop for this trade could be placed above recent highs at 47,000. This trade could make $1,050 if you reach your target, or risk $350 if you're stopped out at your level.